Hello and welcome back, everyone. I'm CA Harsh Mehta. Today, we are going to learn about the chart patterns, hammer, and hanging man. These are part of reversal patterns. Reversal patterns implies that the previous trend that is existing in the market is going to end and change, but not necessarily reverse. Let's take an example to understand this part better. Let's say that the market is in uptrend, that is, the markets are moving up and we see a hanging man after the uptrend, then it implies that the market is going to flatten or go in a downtrend after the hanging man. So, this is what a reversal pattern is. Now, let's see the hammer and hanging man patterns. So, this here is a hammer or a hanging man depending on where it appears in the trend. Whether the color is green or red, it doesn't make any difference, and the color is of no use in this pattern. Some things to observe here is that it has a very small real body and the real body is near the top of the candle. Second thing to observe here is that the lower shadow is way longer than the real body, and it is usually best if the lower shadow is more than twice the height of the real body. So that's what the relation of the real body and lower shadow should be. The third thing to observe here is that the it does not have any upper shadow, or it can have a slight upper shadow which is negligible. So that is what are the rules for a hanging man or a hammer. Now let's analyze this in a chart pattern to see if we can discern this pattern. Let's see how it looks in an actual chart. So this is a proper classic hammer example where we have a downtrend here, and after the downtrend, we see a hammer. Now, though the upper shadow is quite big, but as we said, the lower shadow is almost twice the height of the real body of the hammer. So it fulfills the conditions of hammer, and it is ideal to wait for the close of the next day to confirm the pattern. That is, as we can see, the hammer is a reversal pattern after a downtrend. So it indicates that we have an uptrend after this. And as we can see, that the close of the next day is higher than the close of the previous day, we can conclude that the hammer has formed and the pattern is going in an uptrend after this. As we can see after hammer, the stock has started to rise slowly and it is moving in an uptrend. So this is what a classic hammer looks like. Now let's check out the hanging man. So for hanging man, we have to have a uptrend before seeing the hanging man, which is fulfilled by this previous graph. And as soon as we see the hanging man, wherein we have a small upper shadow again, but the lower shadow is more than double the size of the real body of the hanging man. And so we can say that it is a hanging man, which is confirmed by the next day's candle. That is, the open and close of the next day is lower, and hence we can conclude that the share has gone into a downtrend. And this is a classic hanging man. And as we can see, the share continues to go down after forming a hanging man. So this is how we should pick up the hanging man and hammer in a chart. It takes a lot of experience and time to get a hand on these charts. So I wouldn't recommend you to directly go into the markets and find if you can find the hammer or a hanging man. Just a paper trade, and analyze if you can catch the hammer and the hanging man. If they are performing well within their rules, and if they don't, then you should try and analyze what went wrong and what were the exceptions that you can see in that particular trade. Remember, it is important to wait for the confirmation after formation of hammer and hanging man. That is the next candle on the next day. So here I would like to conclude my topic. Catch you in next video. Thanks.